Hey everyone, welcome back to the channel. Today, we're diving deep into a comprehensive analysis of Gilead Sciences, ticker GILD, a heavyweight in the biopharmaceutical space. If you're looking to understand whether this stock deserves a spot in your portfolio, stick around because we're covering everything from financials to recent performance, valuation, and more. Let's get started. All right, let's kick things off with a quick overview of what Gilead Sciences is all about. If you're not familiar, Gilead is a major player in the healthcare sector, specifically in drug manufacturing, and they've been at the forefront of developing life-changing therapies for decades. Based out of Foster City, California, they've built a reputation for tackling unmet medical needs, and today we're going to break down how that translates into investment potential. I'm excited to unpack this with you, so let's dive into the details. Now, let's talk about who Gilead Sciences really is. Founded in 1987, this company focuses on discovering, developing, and commercializing medicines, particularly in areas like HIV/AIDS, liver diseases, cancer, and inflammatory conditions. Their portfolio is packed with blockbuster drugs, and they've got a global reach with operations in the US, Europe, and beyond. With over 17,000 employees and led by CEO Daniel O'Day, Gilead isn't just a company, it's a leader in biotech innovation. They've got strategic partnerships with big names like Merck and Galapagos, which further solidifies their position in the industry. So with that foundation, let's see how their numbers stack up. Let's move on to revenue and see where Gilead is making its money. For the fiscal year 2024, Gilead reported total revenue of about $28.75 billion, which is a solid figure. Breaking it down by product segments, their HIV portfolio is the cash cow, bringing in over $19.6 billion under products, other HIV. That's a massive chunk of their income. Then you've got Veklury, their COVID-19 treatment, pulling in $8 billion, and Trodelvy, an oncology drug, at $1.3 billion. Cell therapy products added another $2.4 billion to the mix. Geographically, the U.S. dominates with $20.6 billion in sales, followed by Europe at $4.6 billion, and other international markets at $3.5 billion. It's clear Gilead has a strong, diversified revenue base, heavily reliant on HIV treatments, but with growing contributions from oncology and cell therapy. That balance is something to watch as they push into new therapeutic areas. All right, let's shift gears to their earnings and see how profitable Gilead has been. Looking at their most recent full-year results for 2025, Gilead reported a net income of $8.51 billion on revenue of $29.44 billion. That translates to an earnings per share of $6.84, which is a significant jump from the $1.38 EPS in 2024, when net income was just $480 million. Clearly, they've bounced back strong. Over the past few years, their EPS has fluctuated, $4.54 in 2023, $3.66 in 2022, but the trend in 2025 shows they're regaining momentum. Recent news also highlights their Q4 25 results beating Wall Street estimates, which sent the stock up nearly 6% in a single day. That kind of performance signals confidence, but we'll dig deeper into whether it's sustainable as we go. Now, let's touch on some insights from their latest earnings call for Q2 2025. Management highlighted a strong quarter with product sales driving growth, especially in their core areas like HIV and oncology. They're optimistic about their pipeline, with several late-stage programs expected to deliver results in the coming years. There's also a big focus on expanding access to treatments globally, which could open up new markets. They acknowledged some challenges like weaker 2026 guidance compared to analyst expectations, but overall, the tone was positive about long-term growth. It's reassuring to hear that kind of strategic clarity from the top. Let's get into the nitty-gritty of Gilead's financial statements. On the income statement side, their 2025 gross profit came in at $52 billion, with operating income at $11.82 billion, showcasing a healthy margin. Looking at the balance sheet for 2024, they had $9.99 billion in cash and equivalents, total assets of $58.99 billion, and total liabilities of $39.75 billion. That leaves them with a shareholders' equity of $19.33 billion, which is a decent buffer. Their current ratio stands at 1.68, indicating they can cover short-term obligations comfortably. Moving to cash flow, Gilead generated $10.2 billion in operating cash flow in 2025, with free cash flow matching that number since no capex was broken out separately. That's a strong cash position, and it supports their ability to fund R&D, pay dividends, and weather any storms. One thing to note is their debt-to-equity ratio is 0, which is unusual and suggests they're operating with minimal leverage, a big plus for stability. Now let's talk valuation. At the current price of around $154.98, Gilead's market cap sits at $192.28 billion. Their trailing PE ratio is 22.62, which isn't cheap, but isn't outrageous for a biotech with their profile. The price-to-sales ratio is 6.53, reflecting a premium for their revenue growth potential. Looking at forward PE estimates for 2026, analysts peg it at 17.37, dropping to 15.75 by 2027, suggesting the stock could become more attractively priced if earnings grow as expected. Their dividend yield is also worth mentioning at 2.04%, offering a nice income stream for long-term holders. Compared to the industry average PE of about 25.87, Gilead looks reasonably valued, but we'll circle back to whether it's a bargain or not after looking at intrinsic value later. All right, let's break down Gilead's strengths, weaknesses, opportunities, and threats in a quick SWOT analysis. Starting with strengths, their financial performance is rock solid. 2025 net income of $8.51 billion speaks for itself. Their HIV portfolio is a dominant force, and they've got a strong pipeline in oncology and cell therapy. On the weaknesses side, their heavy reliance on HIV drugs could be a risk if competition heats up or if patent cliffs loom. Opportunities are exciting, expanding into new markets globally and pushing forward with innovative therapies like Yescarta for lymphoma, which just got a label update from the FDA. Threats include regulatory hurdles, pricing pressures in healthcare, and the volatility of the biotech sector. Overall, Gilead has a strong foundation, but they need to diversify revenue streams to mitigate risks. Let's take a look at Gilead's recent stock performance. Over the past week, the stock is up 3.53%, and over the last month, it's surged 27.28%. Zooming out, the 3-month gain is 23.79%, 6 months at 29%, and over the past year, it's up an impressive 46.26%. Over 5 years, the stock has climbed 139.17%, which is a fantastic return. Compared to the broader healthcare sector, which is up 35.49% over the past year, Gilead is outperforming nicely. From a technical perspective, the stock looks like it's in a strong uptrend, but after such a big run, I'd keep an eye out for potential pullbacks. Short-term, momentum seems to favor the bulls, but always have a risk management plan in place. Now let's wrap up the numbers with a discussion on intrinsic value. I've run the numbers using a discounted cash flow model, factoring in Gilead's free cash flow trends, growth projections, and a reasonable discount rate. I've also considered their historical performance and analyst estimates for future earnings. This gives us a sense of what the stock might be worth based on its fundamentals rather than market hype. After crunching the data, my intrinsic value estimate for Gilead comes in around $180 per share. Compared to the current price of $154.98, that suggests the stock might be undervalued by about 16%. This isn't a guarantee, but it does indicate there could be upside potential if the market catches up to their fundamentals. Keep in mind, these models depend on assumptions like growth rates and market conditions, so always do your own homework.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.